We can see that the euro dollar is still on the weekly chart between 100-week moving average at 1.1237 currently and 50-week moving average at 1.1095. The space between these two lines is getting more narrow, and I think that a moment when the euro dollar will break out of this range, from being squeezed between these two moving average is getting closer. For now, the euro is having support as the European Central Bank didn't hint at further monetary stimulus, didn't explain its further intention in details, so traders don't expect some big moves from the European Central Bank, and so they don't sell the euro. On the other hand, data from the EUR released in the past week show that further easing measures might still be needed. We saw joint economic sentiment indicator remained near zero. Inflation growth was confirmed to be weak. So we can see that problems exist, and the European Central Bank will have probably to act at some moment in future. For now, let's look at the daily chart of the pair. Here we can see that there was a big bearish candle on Friday. The pair emerged from the levels around 1.1240 and declined to 200-day moving average at 1.1147, which is currently acting as the main support for the pair before some further decline. So if we go below this 200-day moving average, the next levels to watch will be 1.11, 1.1090. Remember this level from the weekly chart. It is the 50-week moving average, and 1.1060. For this will be the area of support line since November 2015, and this is a rather strong support level. All in all, the area of 1.11, 1.1060. I believe that ahead of the Federal Reserve's meeting, the euro dollar will be trading below 1.1196, 1.12. There is 100-day moving average at 1.12. It is now acting as resistance. It is also the lower border of the previous consolidation range of this pair, which is also acting as resistance. And you can see I have applied the weekly pivot levels indicator at this chart, and the weekly pivot level is located at 1.1196. It means that as long as the euro dollar is trading below this level, the outlook for the pair remains bearish, and we need to overcome this level to make some bullish positions. Further resistance is located at 1.1243 ahead of 1.13. This is the resistance line connecting August and September highs, and 1.1330. All in all, if the US Federal Reserve delivers hawkish commands, then we'll test this 2016 support line for the pair. And if the Federal Reserve doesn't offer enough hawkish hints, then the initial reaction in the euro dollar will be to the upside. But be very careful. I think that selling pressure will once again reappear as 1.1330 and higher at 1.1378. Traders will remember that there is monetary policy divergence between the European Central Bank and the Federal Reserve, and they won't let the euro dollar get very high. In addition, remember the economic calendar. Remember that they saw the ECB Mario Draghi's speech planned on Thursday, and I think that if the Federal Reserve keeps rate unchanged and if the euro dollar jumps to the upside, then Mario Draghi will try to say something which will make the euro dollar bulls cool down, and he will try to make the pair reverse down from these levels. So once we are above 1.1330, the euro dollar, look for some signals that the pair may be reversing to the downside and be ready to open short positions. On the other hand, look at support levels. I've mentioned currently the technical picture looks more negative than positive, and there is scope for the pair to go down at least to 1.11 ahead of the Federal Reserve's meeting, and probably if some really hawkish message is set by the Federal Reserve, then we'll get to 1.1060. And just to mention, the next support level is just above 109.70.